Stocks on Wall Street finished a banner month with a thud, as data on spending and unemployment painted a brutal economic picture for investors. The Dow ended the day down nearly 300 points, the S&P 500 fell nearly 1%, and the Nasdaq also dropped, but only slightly. A new report Thursday showed another 3.8 million Americans filed for unemployment last week, bringing the total to a staggering 30 million since lockdowns began. Plus, consumer spending plunged in March by the most on record. Yet, despite the bleak data and a down day for the market, the Dow and S&P notched their largest monthly percentage gains in decades. The Dow rose 11% the month of April, and the S&P nearly 13%, while the Nasdaq had its best month since June 2000. It gained more than 15% this month. Greg Hahn, Chief Investment Officer at Winthrop Capital Management, says some resilient stocks drove the epic rally.
Tech is driving this. The top 5 stocks now represent 20% of the S&P 500 from a market value standpoint. It's dominated by large cap tech. But that employment number was brutal. So the employment number, it's a bad day for a good month is how I would look at it.
Two of those tech heavyweights reported earnings after the bell. Apple's sales and profits beat Wall Street expectations, and CEO Tim Cook gave some encouraging news, saying sales in China were, quote, headed in the right direction as the country starts to reopen. Meanwhile, Amazon delivered a warning to investors that sent shares lower after hours. In the press release, CEO Jeff Bezos said, "If you're a share owner in Amazon, you may want to take a seat because we're not thinking small." Amazon said it could post its first quarterly loss in 5 years because it's spending at least $4 billion to keep up with a surge in online orders.